Good morning, students. From today, we are going to start a new chapter, that is chapter number 4 of account part 2, analysis of financial statements. Friends, in the previous chapter, we have seen how to prepare few of the financial statements. So, today, in this lecture, we will be talking about meaning and objective of financial statement, and then we will come to the topic analysis of financial statement in our next video. So let us see the meaning and objective of financial statement. Financial statement: business or non-business entities maintain their accounts. For preparation of these accounts, rules, principles, traditions, and assumptions of accounting are considered. Financial statements are those statements which provide the result of different financial aspect of entity. Financial statements are an organized report which disclose detailed financial condition of business entity. So friends, we very well know this, that business or non-business entities, they maintain their accounts, and for that purpose they follow rules, principles, traditions and assumptions of accounting, right? And on the basis of prepared account, financial statements are prepared, and these statements show or provide the results of different financial aspect of entity. Financial statement gives the organized report which disclose the detailed financial condition of business entity. Let us see the objective of financial statement, or objective and types of financial statement. Friends, different financial statements are prepared under accounting system. Every financial statement has its own independent existence and use. Financial statements like income statement, balance sheet and cash flow statement are prepared. There are some other financial statements also that are not included in syllabus. With each financial statement is prepared with the specific purpose. Its explanation in brief is as follow. So friends, we know that in financial statement we prepare income statement and balance sheet, also cash flow, right? Also few other financial statements are prepared, means other statements are prepared, but they are not there in your syllabus. So we will talk about only income statement, balance sheet and cash flow statement, right? A brief explanation of all three we will have here. First one, the first objective of preparing financial statement may be to know the profit or loss of business entity. We know any business which is carried on, everybody is always concerned about its result, whether it is an investor or the promoter or anybody. They are always interested to know the result of that organization, that entity. So to know the profit or loss of business entity undertakes revenue activity throughout the year. These activities are of two types: receipt and payment. If receipts are more than payment, then difference is known as profit, and if the payments are more than receipts, then the difference, it is known as loss. The information for such profit or loss is available from prescribed financial statement. This statement is called as income statement. Therefore, the first objective of financial statement is to ascertain the profit or loss of business. So friends, business continue with revenue activities throughout the year, and these revenue activities include receipt and payment. If receipts are more than payments, then the result will be profit, and if the payments are more than receipts, then result will be a loss. But to know this, financial statement is are prepared. To know this profit or loss of business, income statement is prepared, which is a financial statement. Okay, right? So the first objective to know the profit or loss of business, where we prepare the income statement. Let us move to the second objective, which is to know the financial position of business entity. To know the financial position of business entity, the financial position of business entity is determined on the basis of difference of assets and liabilities. When the value of assets are more than liability, it is called a good financial position. When the value of assets is less than liability, it is called a weak position. This information is available from the prescribed statement, which is known as balance sheet. So the second objective of preparation of financial statement is to know the financial position. So friends, we know that balance sheet is prepared for the purpose of knowing the financial position. And what is financial position? It is a state of your assets and liability, means it is, maybe you can call it like difference of assets and liabilities. So if the assets are more than liability, it is a good financial position, and if liabilities are more than assets, then it may be considered as weak financial position. But all these positions we come to know from a prescribed statement, which is known as balance sheet. Let us move to the third objective, which is to know the cash position of business entity. To know the cash position of business entity, the business undertakes transactions of cash receipt and payment during the year. The information about different sources of cash and application of cash is available from the prescribed statement. This statement is known as cash flow statement. So the third objective of preparing financial statement is to know the cash inflow or outflow of business. So friends, throughout the year, business entity deals with the transactions of cash. These transactions can be of two types. Number one, because of them there is an inflow of cash. Number two, because of them there is an outflow of cash. Right? So, for knowing the position of cash, a statement is prepared in a prescribed form, and that statement is known as cash flow statement. So these were the three main objectives of preparing financial statement. So in a brief, we can see this income statement, which is also known as profit and loss account. It is prepared with the objective of, what is the objective? To know the profit or loss of any specific period of the business entity. This statement is prepared. Second, balance sheet. So to know the financial position on a specific day of the business, this statement is prepared. Third, cash flow statement, to know the cash flow, that is cash inflow or outflow of any specific period of business entity, this statement is prepared. Friends, let us talk about the significance of financial statement. The information disclosed in financial statement is useful to existing and potential stakeholders. The financial statements are prepared to satisfy the different types of requirements of management, existing and potential investors, fund providers, short-term creditors, employees, customers, government, and other different agencies. The financial statements are important for these stakeholders, but the analysis of financial statement accelerates the significance of these statements. So friends, financial statements are prepared keeping in mind the interest of so many stakeholders. Maybe it is potential investor, loan or fund provider, short-term creditors, employees, customer, government, or management, right? But if the analysis of statement are done, that gives them a more clear idea about their things which they want to know from the company. Okay friend, so from next lecture we will be learning about the analysis of financial statement. Okay, thank you.